I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down, much more than the stock market is. And it does not yield the net return. The average annual rate of return on gold sucks.
Oh, it's a golden rock. Woo!
So because of everything that's going on right now in the economy, people are asking, should I be investing in gold now or should I always be investing in gold? And the answer is I've always been investing in gold. It's the long-term strategy. I invested in gold when it was much lower and now it's gone up by quite a bit. But in some respects, think about this. If you have extra currency and you want to keep your store of value, you can see that the value of the US dollar is falling. And so you want to get your value, your US dollars, out of the USD and into a more stable currency. That's the idea of gold. And so when you are investing in gold, then what you're doing is you're taking your US dollars that are in free fall and you're stopping it. It's like, boom, you just stopped it from falling. Think about how popular gold has gotten that you can go into Costco and you can buy gold bars. I got a 10-ounce piece of gold right here. I love investing in gold. And so this is Swiss, which is actually the same brand that Costco has in their stores. You can also get these Valcombi breakoffs. If you look very closely at this, you can actually twist these, you can actually bend these and break them off for little 1-gram pieces of gold. Now, this would be used if you're going to be perhaps using your gold for bartering, or if you're going to be using it in hand. So sometimes people like to keep their gold at a gold exchange, but they don't actually keep it in hand. Like, for example, you can buy it and keep it at the Scottsdale Mint versus buying it and holding it in hand. I personally like to keep mine in hand. I like to actually have access to my gold. I've just brought a little bit here today to be able to show viewers. What I do is I'll find which mint I can buy it from at the best price. And so when I'm purchasing, I'm going to look to it's not always going to be from the same place. And when you're investing in silver, you can buy a lot more of it. So this, for example, is 10 ounces of silver, and it's infinitely cheaper than gold. If you buy $100,000 of silver, it's going to take up a lot of space. Whereas with gold, you can very easily get that in it'll be small amounts, because gold is around $2,500 an ounce right now, and silver is around $30 an ounce. So one day there will be a correction on silver and perhaps gold, and silver could correct to go up to much higher. So that kind of brings us into, what is the LIBOR scandal? LIBOR is an acronym that stands for the London Interbank Offering Rate. And the LIBOR scandal was about the major banks colluding together and betting on the future of silver and gold as well to be lower. So they bet on it over and over and over. And this is literally over like a 30-year period of time. Look up the LIBOR scandal and you'll be able to learn all about how these banks have been colluding for years to hold down the price of precious metals. Now, there's a variety of reasons they want to hold it down. The higher that precious metals go, the more it puts their fake money systems, like the Federal Reserve, in check. And so they want to keep the price of gold and silver lower, as well as the tech industry. The tech industry has a huge interest in gold and silver because it's used within a variety of different types of technology. And they'd like to keep it much cheaper than what it's historically been in terms of the rarity of gold and silver. The reason why gold has been used by central banks throughout history is because gold is difficult to get more of. So if you have a central bank system and you have a certain amount of money in the system, it's hard to add a lot more if you have to go and buy gold. Now, if you're in a system like we have today, where you could just hit numbers on a computer and add more, then it's really easy to add more into the system. So the idea of having gold as backing our money system is a very sound concept. Actually, our Constitution says that we should be using gold and silver as our money. And so if the Federal Reserve was to use gold and silver, it would take away a lot of the power that the Federal Reserve has. Why would you want to chain that to the amount of gold you have? Wouldn't you rather just be able to make up money out of nowhere, which is exactly what the Federal Reserve does? Then when inflation goes high, they're like, okay, people calm down. We'll remove a little bit. But let's look over time. From 1980 till now. In 1980, there was $1.5 trillion in the entire money system. Then, by the 2000s, there was $4.7 trillion in the total Fed system. By 2010, we were up to $8.6 trillion. Then 2020, we were at $15.4 trillion. This is a massive increase. And then fast forward to today, where we are at $21 trillion in the economy. So this is a noticeable acceleration in the growth of the money supply, especially since 2008. Now, you might be thinking that gold has become politicized, in that you really only hear about it from conservatives and, on the online places and the conspiracies like buy your gold. And we don't really hear about it from the mainstream establishment. Now, from everything I'm saying, does it really surprise us as to why the mainstream establishment is not propping up the idea of gold, which is essentially a competitor to their reserve system? And we're starting to see that long-term gold, silver, those types of commodities, they do hold their value. In fact, they even grow. That's not what we've seen over the last 100 years with the US dollar. The US dollar has lost 98% of its purchasing power. And guess what? It doesn't grow back. When you lose through inflation, you don't ever get it back. We're never going to get back the prices that we had in 1970. We're never going to get the prices back that we had in 1990. No matter what the Federal Reserve does to combat inflation, we're never going to get back the prices of 2000. They can't undo inflation. All they can do is slow it down. They even tell you that. They have a 2% year-over-year target, and it happened to get much higher over the last couple years. But rest assured, guys, they've slowed it down to 2%. If you guys can read between the lines and see what this means, it means that if you have extra US dollars, then take them and convert them into a sound store of currency. It's up to you to decide what one of those sound stores of currency are. We can see that the US dollar is not that. It can't possibly be, because it's lost 98% of its purchasing power over the last 100 years, which is not the same with gold. It's not the same with silver. It's not even the same with 2x4s and wood. Even that's held its value better. So when you look at it, the US dollar is a manipulated tool that's weaponized against the people. But it's up to you to choose how much you want to invest. And I don't recommend, taking all your money and investing it into anything. So I hope you enjoyed this analysis. And if you're interested in knowing where I get my gold from, go to the comments area. And also let us know if you have any special mints or places that you like to get your gold from, because we're all about sharing and learning here. And I hope that you got a lot of value out of today's video. If you did, go ahead and give us a like. Thank you so much for joining us.